What's up, guys? Bill here. Welcome back to another watch list walkthrough. In this video, I'm going to go over a couple trades I took today and a couple other setups too that I didn't trade, but how I would have traded them if I was paying attention to them at the time or if I had the opportunity to trade them. Didn't do a whole lot today. FOMC tomorrow. Kind of expected a little bit of chop, and the day started out that way mostly before finally the indexes were able to break a little bit out of their opening range and make a move into close. But basically, the first thing I did today is I kind of went back to for fun, really, to a old school strategy I used to use that I feel like's been working pretty good the last couple weeks. In October with more range in SPY, you guys might notice that if you compare the average daily range that SPY's had in the month of October to, like, say, August and even September, it's like double. It's quite substantially increased with the VIX going up and everything like that. So I think this strategy thrives more in those environments when there's at least $5-6 of daily average range instead of 2 or 3, like we had for a lot of August and September. And what this is the 3-minute opening range break. So I'm going to show you kind of like how to play this if you haven't seen my video on it from a long time ago, or if you, you just need a refresher on it. Basically what we're doing is it's a momentum trade that happens after the first 3 minutes of price action, high and low, and you're going to take either calls or puts on the first break outside of the range. So if it, for instance, here we're on the 1-minute chart. We can see these first 3 candles. That's our range, okay? So we'd have a high here, which is basically our opening range high. And then the low would be right here at our previous day's closing price. That's what that dotted purple line signifies. So as soon as price moves to one side of this range and out of it, you would enter. So on this candle, as this is pushing down, we would be trying to take puts here, okay? So, and then using the EMAs, specifically the 9, the play remains valid until you get a 1-minute close back on the other side of this 9. For this would be puts, right? If we took calls, we'd want to see price stay over the 9 instead of under the 9, right? So as you can see, we got a really nice move here from 415.59 all the way down to 414.27, so a $1.32 move before eventually we come up and we close this candle over. This one's right on the line, so I'll tell people sometimes if it closes right on the line, it's up to you. Maybe you can wait one more candle, see what happens. We come down a little bit more, but we don't make a new low, and then we close this one. Definitely at that point you would be out. But this is the 3-minute orb, and it's just meant to catch little quick early morning moves. But when I play it, I usually play quite smaller size than like a really high confidence midday trade. So maybe like 3 to 5% of my account max. And I usually play with 0 DTEs. And I'm just looking for like a 50-cent move. I'm scaling a ton. If it hits $1, I'm scaling most of the rest of it. And then I try to leave some runners. But that's the 3-minute orb. So I played that for a nice little win to start the day out. And then what I did was I took some INTC calls. INTC was, I basically came into the day just watching the indexes, and then I had INTC as an upside watch, inside day setup, and a peg, and CCL as a downside inside bar. So let's check out INTC. I'll show you kind of what I was looking at on the daily chart. Basically, this is a power earnings gap setup. So you can see here we had earnings gapped up, and it's been strong ever since. And it coming into the day was at this candle right here, inside day after the peg. So this is a nice bullish setup. Plus, it was just starting to try to break out of this downtrend. It was up and over the EMAs, both the exponential and the moving average, over them all the significant ones. So I was looking for a break to the upside here through this positive GEX resistance and out of its inside day setup. But it kind of faked me out and I had to take a loss on it. We'll see here that I like to use the 10-minute confirmations on the inside day breaks. So we got that here and we got a nice little retest, and I entered on this retest. And it did get a little bit of a pop, but to be quite honest, guys, I was looking for at least a move to here for my first scale. This was Friday's high, this light green line, and it just never got there. It just couldn't get any momentum. And around this time, as we started fading, the indexes were up against opening range high and kind of looking weak, putting in a lot of wicks up to the top. And so even though I was up like 15% or so here, I just decided I'm going to set a break even stop. And if it gets stopped out, it gets stopped out. And it did. So I took I basically broke even. I wouldn't even call it a loss, but it wasn't a trade that worked out for me like I was hoping it would work out. And it did bounce later somewhere where, roughly where you would draw probably around the 786. So if you were really patient, that was the way to play it. The breakout failed, but it had some nice strength in the morning. And so you can come down here and enter around the 618, and it held and got a bounce. And eventually it took forever, finally hit that target I wanted, like midday. And I looked back at the contracts just to see, and by the time it finally hit, I would have only been up like 10 or 15%. So I was playing weeklies, and that's how that theta will get you. I mean, so it was just a waste of a trade. It's just, like one of those setups that just didn't work today, right? But I love the inside day setups, and especially if they're pegs too, peg into an inside day, great setup. It just took forever to finally play out, and so it wasn't really, anything too great. Speaking of inside days, we also had CCL, and CCL is a great example of something I want to talk about on these inside days. Is on the daily, this is one I posted to Twitter, setup I like to the downside, for the reason being that you can see all this respect that it's had of the 9 in the last 3 weeks. Every time we get close to it, it rejects, right? And so what we had coming into the day was this inside day that was right at the 9 EMA. Now, if we go to the smaller time frames, you'll notice that we didn't ever really test the inside day high, which is normally, if I'm going to play the range of an inside day, I like to let price go to the top of the range, and reject it and then enter. So we didn't quite get that, but this is, look at the dump we got just right off the open. And I think that's because of the daily chart and how close we opened right at that 9 EMA. So sometimes you got to keep in mind those larger time frames and where they are on the chart, especially with regards to moving averages and things like that. Where you might just want to say, you know what, I'm going to take CCL puts right off the open today. I'm close enough to the top of the inside day range. I can enter at 1143 and eat a pullback to, a close over this level or something like that. And that way you catch this huge move. And then furthermore, on these inside day setups, if it opens on one side of the range and travels all the way to the other side, it's a lot less likely that you're going to get continuation on the traditional breakdown or breakout. So as you can see here, by the second 5-minute candle a day, it's closing and confirming the inside day breakdown. But this is a lot less likely to continue to play out to the downside because of how far it came already than it would be if it opened here and then put in that move down, right? So this is where inside days, having a thesis. So, as nice as they are as two-way opportunities on, any given day, having a thesis can help you a lot because you can take advantage of this range and you can buy puts up here on the open to move down to the bottom and be nicely in profit before we even worry about will it actually break down and continue. And you can avoid trying to get in here on this retest, chopping and eventually getting stopped out. Okay. Let's see. I really didn't do a whole lot else, guys, today. Waiting for FOMC and all that. I did take, was that on, I might have been on QQQ. I took one short trade on QQQ. Yeah, it was here. Okay. So, basically we had quite a decent size opening range on QQQ. Damn near $3, $2.50, pretty decent size on opening range on Qs. And pre-FOMC, a lot of times you'll get range bound chop. And that's what we had. If you can see here on the 5-minute, chart, we never even broke out just on the 5. And I like to use the 10. We didn't break out of the range on the 5 minute until almost 3.5 hours into the day. That's a lot of chop, right? So in those kind of situations, what's best to do? Try to play the range. So, I was really tempted to play calls down here and I didn't pull the trigger. It would have been nice. So what I did instead was once we got up here and I started seeing all these wicks up, I took puts and, for a nice dump here to fill this, FVG down here, right? Came down and filled it. But just pretty simple trading today. I didn't try to do too much. Didn't use a ton of size. Took profits early, just kind of anticipating chop. We did end up breaking out and making a decent move. Not terrible. At that point, I was just done with the day, and that's fine, guys. Like, I prefer not to sit at the screens all day and drain my mental capital for a few extra bucks on weeks like this where we're waiting for big news, big catalysts, stuff like that. FOMC Wednesday, Apple earnings Thursday. I'm just taking it easy. The market's going to be there tomorrow. There's going to be a ton of opportunities in better conditions. But that's what I did today. Nothing too crazy. But if you have any questions about anything like that, please let me know. I am going to be doing some back testing on the whole month of October for that 3-minute orb strategy that I mentioned earlier. I think I might start playing that again as long as I feel like there's going to be range in the market, right? If I start to see SPY putting in a bunch of $3 range days, then that 3-minute orb will go away. But while we're doing $5, $6 ranges, we had another $5 range today on Qs. When we're doing that, I think it's going to be something that works fairly often. I'll probably do a video update on that in the future as well with like exact ways I'm going to play it, what kind of profits I'm looking for, what the average win is, what the average loss is, all that. So if you got any questions, let me know. Otherwise, take it easy.